What's up, everyone? Good morning. Morning. It is Wednesday, January 29th, and this time I'm going to get it right. We have earnings today that are coming in after the bell. Microsoft, Meta, and Tesla all have earnings after the bell today, and that's not only the big piece of information that we got going today. Today is going to be the first Fed event of the year of 2025, which is going to be vastly important. And I come across this tweet every time we've got a Fed rate decision, and it's from Pax Trader, right? Ex-floor trader turned electronic trader, guy with a lot of experience. And I love this quote. Every time he tweets about this, this is the quote from Twitter. Pax Trader 777 shout out. So I've never had my best day on Fed Day. I've had my worst day. January 3rd, 2001, Greenspan did a surprise 50 basis point rate cut on the first day of the year. I was short a lot of NQ in the pit. We had the biggest one-day rally in history. NQ rallied 26% in a few minutes. Me and Susquehanna were bidding the market up 50 to 100 points at a crack with nothing trading. I couldn't get out and I lost 1.5 mil of my own money in just a few minutes. Capital preservation today, my brothers and sisters. This is a very, very powerful quote, and I think that people need to remember this continuously on Fed days because there's a lot of volatility. You see people blow out very easily on Fed days. There's a lot of movement, surprise this and that. But let's see what the Fed's got cooking. Last time that we saw the last Fed rate decision in December was a cut, if I'm not mistaken, and we had a very, very strong downside move that propelled us pretty low in retrospect before we started bidding back up. So the Fed today, the FOMC, the Federal Open Market Committee, is widely expected to take a breather this afternoon, the first pause since it started cutting rates in September, and as a result, investors will focus and be more attuned to the Federal Reserve signaling its path ahead. So the main thing that we want to take a look at is the Fed dot plot, the future expectations of Fed cuts, hikes, whatever their rate decision, and where they expect the funds rate to be in a year's time, 2 years' time, so on and so forth. We started the year off with the expectation that we would have, I believe, like 3 cuts. Right now, we're dropping that. We're dropping it pretty substantially. A lot of big banks expecting 0 this year, and Bank of America, like I've said before, is expecting hikes. So the Fed trimmed the Federal Reserve or the federal funds rate by 100 basis points to 425 to 450 in the last 3 meetings, with a supersized 50 basis point cut in September, followed by 25 basis point cuts in each of the 2 meetings following that. And the easing followed a trend of decelerating inflation while the labor market cooled from its overheated state in 2021 and 2022. Policymakers are expected to wait and see how the economic data unfolds. The economy faces elevated risk as President Trump rolls out his policies, particularly with upcoming tariffs that stoked fear of inflation resurging, and the debate now appears to be whether the Fed will cut 2 more times this year or not at all. So the dot plot won't be released this meeting, but Fed Chair Jerome Powell will provide some insights into the Fed's thinking. Market pricing indicates a 90% probability that the Fed will cut at least once this year, with a 62% chance that it will cut at least 50 basis points, so 2 cuts. So many analysts do believe that the Fed should avoid signaling rate cuts before July to prevent exacerbating inflation fears. We also see that the markets may have to brace for another extended pause and even a rate hike or 2 due to the lingering inflation, which is, right, that's something that Bank of America has been talking about, and it seems kind of ridiculous, but at the same time semi-logical based on the aggressiveness that they cut before and the reaction of the market, and also inflation just like holding steady realistically and creeping up. So we'll see how this shapes up, because we got massive earnings at the end of the bell with a Fed day. Like, we've got a pretty big afternoon, and I want to make sure that we stay really, really I guess, risk-focused, risk management focused, and preserve capital, right? There could be some nonsensical little moves before the Fed comes out. Volatility has increased and movement has increased, but people expect some kind of trend movement. So regardless, capital preservation is going to be key. Size down, drastically increase some of the stops, and really limit the amount of trades that you take throughout this. Today, in terms of other news, what we got going is We don't really have much. We got EIA petroleum inventories, we got survey of business uncertainty, we got the FOMC announcement, obviously. So in the morning session, there's not really too much to add, but the afternoon starts to get pretty plentiful. And what we got going on is big tech is trying to pump into all-time highs. Well, some of it at least. Meta is at all-time highs. It's got earnings today. Amazon's at all-time highs. It's got earnings next week. And then we're starting to see a pretty big jump in Microsoft with earnings coming out after the bell, as well as Apple, a multi-day green streak on Apple, pulling back a little right now, trying to escape its major balance that has formed over the past multiple months. And a strong upside. Now, NVIDIA also had a pretty strong green day yesterday, but there's still a lot of concern surrounding all this DeepSeek stuff. It seems like right now buyers have brushed this off and have continued the bid, but that doesn't mean that things can't drastically change along with these earnings and the Fed. In my personal opinion, which doesn't really mean too much until it happens, that I'm not going to be betting a lot on this. Just some thoughts. That there's still a bit of uncertainty in these markets, and I don't think that we just like zoom up into all-time highs just like one beeline. I think that there is a little bit kind of slack and rotation before something of the nature happens. I also do think that earnings are going to be fairly good in big tech, so that's something to watch out for. We had a pretty nice pop on Netflix, and it seems like some of the other ones want to follow suit. We got the first semi one, ASML, when was it? Pre-market, I think, yesterday? I can't remember. ASML, Semi's name popped up trying to fill the gap that was created after that massive drop that we saw on Sunday. So its earnings did fairly well, and we're seeing some signs of relief pops and positive earnings in big tech. So we'll see how it shapes up overall, but the way that I see it is massive capital preservation day, right? Less trading, less activity, lower size, and going from there. So with that being said, let's open up the chart for the S&P 500 futures. This morning, we were talking with the team in Discord pre-market Euro session, looking for a short opportunity actually from 6105. So far, it's panned out extremely well, but we are in an auction to the upside. We have this immediate failed acceptance move, but we have a stack of heaviness of volume in the auction low around 60-70. If we're going to hold things out and we're going to stay nice and positive on the day, or I guess into the morning session, right? Of course, into the afternoon, things get wild. But if we're going to hold out the current trend and things are going to be okay, that we should hold 60-70 to try to bid from that area. Anything below 60-70, I think that we expand a little lower and clean some of the auctions to the downside. There was some pretty heavy buying going on yesterday, just constant rebid. I know that a lot of size has been hedged for today. Naturally, you're going into a very risky event, and there's a lot of hedging, which is just expecting some potential downside momentum movement. So 60-70 is going to be a major pivot here on the S&P going forward today, and that's what I'm going to be playing off of. Anything above 61, like 10 area, 61.20, you start accepting higher than that. I think we're positioned for not only a gap fill, but the potential for a stronger momentum move that could lead us into all-time highs going into February, first few weeks of February, let's say. So let's open up our live trading room. I hope everyone has a fantastic capital preservation day, and I'll see you guys tomorrow. Thank you, and ciao, ciao. Remember, check out community.tradeproacademy.com for our open Discord, where we